Welcome back everybody into another daily recap. Today is the 10th of August and was the CPI day. As you can see, today the main event was the CPI at 12:30 GMT. It came out lower than expected and exactly like previous. So it looks like we are making a sort of cap top. If we want to look at the chart, sort of chart, looks like we are now coming below, going below, going down, due to all the, of course, interest rate hikes that have been has been happening in the last few months. As you can see, we might have reached the top. For sure, it is slowing down. Let's see if it will actually go down to 5 or even reach these previous highs at 4.5 with upcoming interest rate hikes. As you can see, this is the main event, of course, so there's no much price action before that. What you see is that we already chart up the demand areas as per previous price action, demand, supply. We also had the previous demand area down below. CPI, this is the minute before the CPI actually, and the price grabbed liquidity exactly at the demand, and from there went basically 200 pips on the upside. This 1 minute candle was like a 20-second candle, broke without not even considering it 1795 supply area, and then this big supply area, this 1800 1804, had been sort of respected, not on the dot, but with such a volatility, this much volume is not really likely that you can have a clean price action respected, because the volatility can easily bring up and break the PSAs before then showing us regular price action. And this is why today I didn't trade. So I just wanted to stay on the charts, look at the price action, but not trade, because usually when I trade the news, I make mistakes and I didn't want to do that. So I said, okay, I will just enjoy staying out, and that was it. So as you can see, we had some candle confirmation at the top of the supply area, could have given us a quick 30-35 pips. As you can see, I don't like it because the stop losses, the ranges become so big that I mean it's quite dangerous. So to enter this candle close and have a safe stop loss, you would have had like 22-25 pips, and then you would have got like 40 pips. Depends if it's 2 to 1. If you wanted more, then for example, you had this rejection at this supply turn demand, but then price failed to close strongly above your PSA. But if you enter there, that would have needed like more than 30 pips stop loss. But anyway, you see that the price action is showing you a top being created. You have multiple rejections at this level, 1806, 1807, and then the price starts reversing. I can't really say, I mean, of course, with the chart, you see that, okay, price then stays below the top of the supply, so you might already enter sells. For me, if you wanted to enter sell, you could have entered over there, understanding that, okay, price is failing. Look at this candle. Price is failing to break, to make a new high, even though we had this clean break and retest. New higher high, possibly new higher low. The next candle slowing down a lot, and then the next one is staying bearish. You could have entered over there okay, now if the price goes up, okay, I will have my stop loss hit. I will take my risk. Maybe you don't even need that much, because if the price breaks these previous highs, then maybe you leave enough space for a top wick. I don't know, this is just random. Then my trade idea is invalid, so you can give like 20 pips 22 pips, and to have a very good risk to reward ratio. That of course in Insight it's very good. That's basically a 130 pips correction, and I mean, even if you give like 20, 30 pips, it's a very good ratio. Of course, you never know if the price will stop back there and make a new higher low. But anyway, this also is a nice candle confirmation showing us that the price is staying below the supply. This is the supply is confirmed to be supply because of this price action. If there was like a cleaner price action like this, impulsive then correction and then continuation down, like it will happen here, then the price action would have been more predictable. But anyway, as well, the same, this supply area has now turned demand, and now we're going to see it in the images because you can understand that where is the price going, where is the price reacting. You see all these candles are slowing down, and you look on the left and you see that this price action, this is the NFP demand area that left a lot of orders, pending orders, or whatever is the liquidity, demand liquidity from the upside. So when you see this reaction and the price is staying below, you can either wait for a candle confirmation, you can even enter over there at this directly at the demand area, supply turn demand. 1795 is a very strong level, and then yes, you suffer some stop loss, some drawdown depending where you have the stop loss, or you wait for the candle confirmation and take your 50 pips. I mean, it's huge. 50 pips range looks very small. That's why to enter is like 20 pips of stop loss just for the sake of it. And let's have a look at it now. Based on the price action, this one was doing the London. So to see what happened at supply and demand. This was previously CPI, nothing special. As you can see, this one was the live idea with the stop loss. Entry candle close because the candle is closing with a showing some rejection. The stop loss is below this previous level, 25 pips, and it's still at 1:2 risk to reward ratio. And there you go. You survived your stop loss and you go to 52 pips, which is more than 2-1. Afterwards, it's very easy to see that this supply is being retested, so that bias is going to be bearish. You already started seeing that the candles are leaving top wicks and are getting smaller and smaller, and you can see it. And you have 1, 2, 3, 4 minutes to enter sells. And with the price respecting those previous lows, that's the last lower high in this very strong trend, we can say, is being respected. You can enter anywhere and have the stop loss in the, like a little bit above the supply level, and in that case you can be safe. And that's if you enter there, that's a 70 pip move, easy. You see now, we're going to see, that's a 70 pip move. Of course, you don't need to take all the trades, but this was just my trade idea. Say that supply area turn demand, which is over here, like, yeah, I don't know if you, here. Very strange trade. This one would have been a loss, for example. This bounce would have been a loss because even leaving it below, I mean, this is a 40 pips stop loss, doesn't make any sense. This one would be a loss, but okay, this one is a loss. When you see that the price is not using this supply area as a demand area, is using these previous lows, that's where you can understand, as you can see, this buy at this new demand area, and now by entering so close to the demand, you can have a 20-25 pips depending of course the range is big. So if you want to reach 66 pips, or 70 if you want to reach the supply, you can allow a little bit bigger, like 20, 23 pips stop loss. And there you go. Price action is very slow, but anyway, it stays there. This one was the 10 a.m. candle is a 4 p.m. Understanding that the pullback before that candle open could react over there. I was expecting either the price to do a pullback here and then continuation down, or the opposite, and the opposite happened. This is a 10 a.m. That could have been your safer entry if you didn't want to take the entry over there. That's your safest entry, not the cleanest price action for like 20 minutes, but then you go to your 60 pips and that's it, not more. And after that, price price went a nice and crispy 100 pip move again. Price respected the supply area, sort of in the middle. On the higher time frame, it was respected, closes below and retests it. That's what I was talking about here, that I want a impulsive and a retest, a pullback, and then continuation down. And that's exactly where you could have entered when the price was slowing down. You see that the price is slowing down there, closing there. That's of course is a risk, but now the ranges are not that big. That's a 20 pip stop loss. Of course, you would have gone maybe at break even at 30 pips. Maybe you took some partials. Price can easily bounce from this price action on the left. Can easily bounce. Look exactly how the price action is messy, where it was messy because it's crowded. The liquidity is not clear. But again, what you see is that afterwards, if you're still trading, of course, this is late in New York. If you see that the price fails to break above, so the price is still respecting the supply area and is not making a new higher low. So it's failing to break, and then you can take your second entry. Of course, this is just about leveraging your profits, because if you had your 30 pips profit from here, you can enter at the candle closes over there, and you see again the difference in price action from the bullish candles. Look at the bullish candles over here and the candles when they reach the actual top. You can enter at this first candle, you can enter at this level. As soon as you see 3 minutes failing to break above, that easily can be your entry. And that in this case is a 20 pip and stop loss, and this one just goes 100 pip without ever turning back. You have your retest of the demand area, as you can see, impulse, retest, candle leaving a top wick and closing bearish. That's your further entry with the end of the pullback here. This is a much nicer, this is a 15 pips stop loss to have like 60 pips TP. Now, where is it happening now? Let's see, where is it happening? This is, what is it? NFP, the CPI. Yeah, basically there. We have this demand area. Probably can also go down, but of course it's getting late. Look here. If you look these candle lows and you go on the right side, you see where the price is reacting again. Okay, as you can see, you see that the price is reacting, but now it's stopping. You have 1, 2, 3, 4, 5, 6, 7 minutes to see, okay, but where is it reacting? At a random place, like here? No, you go on the left and you see, okay, it's reacting exactly at these lows. So that is a further confirmation that the price is possibly breaking, continuing at least to this level. Now, of course, the range is smaller, 25 pips. This bearish, as I told you, can easily go to fill this demand need to go back up. But anyway, I mean, this is all the way from supply to demand, from demand to supply. That's pretty nice. That's a 100 pip move. You don't need to catch it everything, but you have the tools. We have the tools to catch most of it. Then maybe you get there, you enter there. No, maybe not. You get here and you close full at 60 pips, 70 pips, because you don't want to stay risk it. Because in this case, you can either, okay, yeah, we are 70 pips. I put the stop loss over there. But if you get there, you have, okay, 42 pips, but I was 70 pips in profit. Why did I give up 30 pips? Like half of my profits. But sometimes we just retrace and then goes back to 100 pips. So that's a different topic. Supply area respected, supply that is turning demand, and that gives you 60 pips multiple times. I mean, it gives you 40 pips and then 60 pips. You understand where this price action was going. As you can see, I showed you here the buys from this level, and this is like 80 pips. Look at the candle. Are we going to fill the demand, or are we going to create a flat candle body support over there, therefore closing bullish? Let's see just these 20 seconds to see where the price is closing, and this can give us further information. Probably with the low volume, the price action will be quite messy, but it's apparently closing below. If it's closing below, it depends on the PPL, but can go and grab liquidity over here. But this is it, guys. I hope you guys enjoyed. I don't think I have any more pictures. 70 pips, exactly. That was it. Let's see here. It's going bearish. See you guys tomorrow.